Hi, my name is Enrique Gomez. I'm with Commercial Mortgage Depot. I'm here with Ken Rose. Ken Rose is a good friend of mine. He's an attorney in New Jersey. We've been friends for over 25 years. We've done a lot of commercial financing throughout the years. Today, we're going to talk about cannabis and cannabis funding. We're going to talk a little bit about cultivation, processing, and manufacturing.
Enrique, thank you for inviting me to speak with you today. We have a tremendous opportunity in New Jersey and in the United States with cannabis lending. One of the things I want to discuss with you today is just give a little background of the United States cannabis market, give a little bit of a background as to what's going on in our backyard now, because there's a lot of excitement now in New Jersey and New York. Talk about how we can help borrowers in the space based on our working for over 25 years together and developing different relationships, particularly in the real estate space, and how we can help people going into and borrowers delving and diving into this exciting new marketplace in the United States. And right now in our country in general, we're experiencing an incredibly accelerated pace of legalization. It's almost like legalization cannot happen fast enough in our country. Every time I turn around, there's a new jurisdiction, a new state that has now gone adult use, or they call it recreational. Adult use is recreational cannabis. I believe now we're up to 16 states. And I know Connecticut today, Governor Ned Lamont of Connecticut today announced measures he's taking to try to get adult use passed by the legislature. So as of today, adult use, or what is called recreational cannabis, is legal in 16 states. Connecticut may be the 17th state, and medical use in the United States right now is up to 36 states. Also, marijuana, for those listening, has been decriminalized as of now in over 44 states. And it's hard to guess what's going to happen at the federal level. Many pundits and followers are thinking that it's likely by 2024 that federal legalization of marijuana will occur. Because on the federal level, the fact that marijuana is still classified as an illegal drug, it creates many, many problems for the cannabis industry on the state level. And that's why capital is in short supply, especially institutional capital is in short supply for the lending community. So it takes people with developed relationships like you and I have in this industry with lenders in the state that are willing to go forward. And we'll talk about the relationships that we have and the deals and the parameters of the deals that we look at together. But as far as the big picture, we're hopeful that on the federal level, we will see certain acts being passed. One is in consideration right now. It's called the Safe Banking Act. And that essentially would give the cannabis operators in the company the opportunity to say that the monies are not proceeds of a crime, because believe it or not, with our hodgepodge of crazy regulation in this regulatory scheme, at the federal level, money from state legal cannabis operations are still considered proceeds of a crime. Because to this day, there's this fear in state law that some federal action may be warranted because of the fact that we're still considered acting federally as if we're in a criminal enterprise. And that's what's gotten us to this point where free-flowing capital is very difficult during this federal scenario.
Ken, let's talk about the financing. What types of financings are there out there in the cannabis market?
What we can do for borrowers specifically is in our origination, we can do direct originations because of our experience. Okay, and we can look at a deal, and we have the ability to not just source it to the best lenders available, but we have the opportunity to marry the lender with the borrower based on our criteria that we have utilized on loans in the past. What we do best is we understand the lending environment, and we understand what relationships are out there, and we can develop those relationships with those borrowers. So what do we do when we look at a company? Well, we look at a company's financial strength. We look at the state environment for cannabis. So we want to look at New Jersey. Every state has its own regulatory scheme. And I I urge people to know the scheme in New Jersey or New York or Massachusetts, and we are capable of doing loans in all 50 states in this country. We have closed loans already in Colorado, which is a maturing market. We've closed loans in Massachusetts, which has been adult use since 2018. And we are now on the process of finishing a closing for a loan in Michigan, which was adult use in 2019.
So the loan you did in Mass, what was the loan for? What did it details for? Some of the land, some cultivation, some farming, some licensing. How was that broken down with the loan?
I call it the 3 pillars of lending for us. We look at the cash flow or projected future cash flows of the licensee. How much money will they generate in year 1, year 2, etc. So that's pillar 1 of our analysis. Pillar 2 is we look at the licensing scenario in that specific state. How many cultivation licenses? How many manufacturing licenses? How many retail dispensary licenses are they going to allow? It's good to know what that license entails, what its limitations are, and what its limitations are not, because sometimes you have licenses that have multiple use purposes. And this is what makes it a little more complicated. You have to get into each state's licensing scheme. New Jersey and New York are not entirely compatible within their own licensing schemes. So what's good for a New York borrower may not be good for a New Jersey borrower as it relates to the licensing.
It all depends on the license that they're having.
And the license, right, and what they allow.
With the license, it also tells us whether they're going to be able to grow it, manufacture it, break it down, because you have different licenses also to break down.
That's right.
The plants, once you're cultivating, some places you could do retail, some places you could do wholesale. So we have to figure out whether it's going to be a wholesale or retail license.
So what we do is we do a number of analyses. Our 3 pillars are the future cash flows, the borrower's operations. We do a strict loan analysis that you and I have been doing on deals for 29 years together. We look at the loan size, the capital structure. We look at the security, the guarantees, cash flows, any intellectual property. We go through the covenants of the deal, and we want to make sure that we understand the risks going in. But we look at the licenses owned in that state. We want to see the licenses under application in each state. We want to know what the scheme of licensing is in each state. We want to know if the license is transferable by the company in that state. And we want to analyze the marketplace for licenses, for growing, for plant counts, for plant capacities, for greenhouse capacities. Each state has its own unique requirements that are worth noting. New Jersey, for example, caps cultivation licenses at 37 licenses. So in the state of New Jersey, you cannot have more than 37 cultivation licenses. That's final, right? So once they give out the 37th license, that's it. So if you have a client that's coming to you for cultivation license, you need to pick up the phone and say, hey, Ken, do you know how many cultivation licenses New Jersey has given out so far? And I'm going to say, I don't have that number. And the reason we don't have that number yet is because New Jersey has not yet set down when these license applications can be submitted. As of June 6, 2021, New Jersey is hoping to have its system up and running by January, 6 months from now in 2022. And they have not yet come up with all of their requirements and regulatory requirements for those cultivation licenses themselves. New York, by the way, does not have that limitation.
Let's talk about the deals that we closed, like the one in Colorado. What was the financing for?
We did a $7.5 million deal in Colorado. Right outside Denver International Airport is the facility. The deal was structured as a hybrid loan, really a hybrid construction loan. We gave $2.5 million to the borrower for the acquisition of the real estate. And right now it's real estate that is in a very rural area where they're going to construct a large outdoor greenhouse, state-of-the-art processing facility with a very large square footage component with great distribution capabilities.
How much did he pay for the land? How much was the cost?
We gave them almost 80% of their financing on the land. Now what they're putting in are the lighting, the equipment, and we have a lien on the equipment. We have helped them actually get state-of-the-art lighting from some of our other relationships in the marijuana space. So because we've been doing this for 5 years at least already, we have relationships with growers, a lot of the services that provide the so-called ancillary or secondary services in the marijuana field. So these guys had special lighting needs, and we were able to put them in touch with a lighting company that has patents, state-of-the-art. We think that this will be a very successful business. One of the big pillars is real estate. So we looked at the size of the tract. This was a very large raw land piece, large acreage involved. And we were able to justify a loan of $7.5 million based on the acquisition. We priced out the construction and suitability of the grow facilities. We looked at the licensing. Colorado is a mature market, but these guys have very good manufacturing practices, which is a big thing now in the cannabis space. It's very important to be, environmentally sound, environmentally sensitive, and get that stamp of approval for the manufacturing plant as well. That's very important in this space at this time.
So what are the time frame on most of these loans? Most of these loans are 2-3 year terms.
We don't see a lot of amortizing loans that we've done with a number of our smaller borrowers, but there certainly is opportunity for amortization on loans.
But they're interest only for 2 years, 3 years?
Yeah, we've been doing interest only loans for 2 to 3 years. We want to make sure that we can keep these borrowers in a very strong cash flow position, and we're trying to mitigate the risks of paying high interest rates for an extended period of time.
The stores, are we doing any retail loans to some of these clients?
I'm in Passaic County, and some towns in Passaic County have already determined by municipal ordinance that they do not want certain types of licenses in their cities. Some towns have said we do not want dispensaries because we don't want that kind of a space in our cities. We prefer licenses that are cultivation based. So the short-term implications of that are abundantly clear. If you're a borrower with a business plan, you need to know what your local government is allowing you to do and what the state government is allowing you to do. Most people don't realize that there is a 7% sales tax in New Jersey, and the municipal tax on cannabis can be anywhere starting at 2% and up. So a cannabis operator has to at least minimally understand that they're going to be paying 9% taxes minimally going forward. So a $100 purchase minimally will be taxed at $9. And remember, since it's federally illegal, you can't distribute to New York. You can only distribute within New Jersey. Intrastate is allowed. Interstate, because of this crazy federal scheme, is not allowed. So even though we're right close to the border of New York, we cannot distribute anything across the border until it's federally allowed, which is predictably not going to be for many people are suggesting at least 3 years down the road still. And there's also the prohibition, for example, about opening up within 1,000 feet from a school, by example.
It's going to be similar to a liquor store.
Exactly. That's exactly right. That's exactly right. New York also became adult use recreational about 2 months ago, I believe it is already. And they are also in the process of coming up with their legal requirements, determining their specific schemes, their regulatory schemes. So as we go forward, we have to stay very, very cognizant and aware of the licensing rules of not just New Jersey, but each locality. So you need good advice. You need people with experience in this space that understand the issues. You have to understand there's 3 issues involved when we look at the metrics of doing a deal. We're looking at the cash flows or projected cash flows. We're looking at the quality of the management team in that analysis. We're looking at the licensing scheme of the state. what exactly is allowed in the state and most particularly in that locality.
To start a farm, a cultivation farm, what are we talking about? $5, $7, $8 million for the land, the seeds, the whole setup?
A farm would be excellent for a cultivator who wants to have an indoor facility and an outdoor facility or greenhouse. Obviously, the real estate will be a large component of that deal. A license like that would typically be tied into the real estate. What we're seeing a lot of in the institutional space is sale leasebacks, because if I have money tied up in a farm, if I could sell that farm to a large institutional cannabis lender and they lease back the space to me, the borrower, then I have cashed out my farm and I now have more money to expand and to use for the grow facility. So we're seeing an incredible and inordinate number of deals where I get into a space, let's say a retail dispensary in a building in Montclair, New Jersey, that I'm renting from a landlord. I get a dispensary going, I get the cash flow going, I get a good brand going, I get a good following going in Montclair, New Jersey, and I want to be able to utilize that space and grow and get another dispensary or two and expand my footprint in the state of New Jersey. I'm going to sell that building to an institutional cannabis lender, and those lenders are out there, and we work with some of those lenders to free up capital for those borrowers that are in the dispensary space. In that farm situation question that you just gave me, that hypothetical, I could sell that farm, pull the money out, and put it into a grow, into newer equipment, newer biology, newer micro engineering, higher technology, because even artificial intelligence is coming into this space, and all of this costs money, equipment, growing equipment. You have to make sure you don't get any mold from these plants. You have to be a microbiologist to understand what's going on in this space. And when we open up and get those monies from those positions, we have more money to spend on the botany, on the cultivation, and what's really ultimately the most important thing down the road is the quality of the product. It's an exciting time in the industry because you don't have a lot of institutional lenders because, as we know, it's federally illegal. But there are certain lenders that are out there that on a state-by-state basis are lending money. We have relationships with many of these lenders. We have relationships with a lot of private lenders. I'm going to tell you, we should really do this in 2 months, because 1 month in the cannabis industry is like 1 year to 2 years in any other industry. It's changing rapidly. In 2 months, we may get more guidance from New Jersey and from New York, which are the 2 markets that you and I service.
Connecticut, yeah.
And Connecticut. These are the markets in the tri-state area that you and I work on together. But you have to know when you get into this field that it's heavily regulated, and understanding that component of it is very important as well to this new, incredibly actively growing industry that COVID-19 taught us is recession-proof. This is a recession-proof industry. Thank you.
Alcohol. Thank you. Thank you very much. It's been great.